Hey traders and investors, it's Chris from Mullen from the technicaltraders.com. I've got a unique angle on the markets that I want to show you that really is kind of an eye-opening, I think, for potentially some of you in terms of real estate. We don't always look at the stock market as a real estate play. Typically, people buy stocks or they go and they buy a house for real estate. But the stock market does give us lots of opportunities to actually play the housing market, the real estate market, through REITs, ETFs that really are owning properties. And so this here is the IYR. You've probably heard of it before. It's one of the top traded ETFs for the real estate market. And you can see here the cycles in the real estate market going up and down. This is the weekly chart. So this is going back to 2014. So you got 15, 16, 17, 18, 19, 20. We had the COVID real estate crash, and now we're back into a boom here, heading back up to those highs. It looks like a noisy chart, and to one extent it is, but there's a lot of opportunity. Real estate is more of a long-term play. You're trying to just give it time, and over time the assets will gain value. And on top of that, you'll get paid a dividend with these REITs. Let's zoom way out here. This ETF goes back to when ETFs more or less started, which is 2000. And you can see here pretty substantial gains. If you were to move in to the real estate market, then you can see there's some pretty big gains. Obviously, during the financial crisis, financial crash here, then the debt issue, obviously real estate corrected. But keep in mind, this is what's really interesting about this is a couple things. Is first of all, you can move into the real estate market and own all kinds of different plays. If I was just pull this up here, it doesn't matter if you got $100 or you've got $100 million. You can put it to play and play real estate and move in and out of the real estate very easily. You can see here there are tons of funds. There are, how many are here? It doesn't give us a number, but there's 2 pages worth of different funds. You've got all kinds of different real estates. You've got industrial, you've got residential, you've got international infrastructure. You can play all kinds of different real estate markets. We can go to the dividends, and we can sort by the dividends here. Let's go to the highest dividends. Where is this? Dividend yield, sorry. Let's go to dividend yield. And you can see some of these REITs owning real estate are paying 8%, 6, 7%, 7%, 6, 4. They're paying some pretty nice returns in the market. And that's one of the reasons why real estate continues to take off. You're not going to get this in a bank anywhere else. And we continue to see a lot of these plays. There's even self-storage REITs that you can get in. Self-storage businesses are booming. They're going up in value dramatically. Rents are going up every 6 to 8 months. I own a self-storage facility myself. I built one a couple of years ago, and it's fully occupied with a waiting list. And it's just really all kinds. Real estate has got lots of opportunity. And the self-storage side I really like because it's like residual money. People pay monthly, and you've got a lot of tenants. Software manages it all. And it's a very steady paying job. And actually during recessions, self-storage actually is one of the real estates that actually hold their value and continue to do well. Most people downsize, they put stuff in storage, and they actually do very well during weak times. So there's some pretty interesting ways to take advantage of this, huge dividends. And let's go back to the charts here. You can see if you knew when to get into the real estate market, you can play huge gains. Every one of these purple lines at the bottom of the chart here is a dividend being paid. And so you're going to get paid either monthly or quarterly, however that fund pays out a dividend. Now, let's go into the technicals. Let's zoom in a little bit more here into these charts and take a look at this analysis that I put on here. So if we take a look at the time cycles, real estate, everything has its type of cycle, and we've got a pretty big cycle that kind of rotates here over and over again. Over the past several years in real estate. And if we were to use a different bottom, a different cycle on here, let's remove that. We'll remove that one. We'll look at this other time cycle on here that goes through It's usually another low just after a major low, and it happens over and over again. This goes way back in time as well. Now, if we were to overlay the two of these, you're going to notice we're going to get an idea of where cycles cross and where these levels are. Now, this chart is going to get a little bit noisier with more drawings, but bear with me here. If you look where they cross, so we're just going to draw those on the chart here. This one should pop up. Here we go. During that time, you can see the market when they cross, more or less you still have another almost a year to the upside, or more or less half a year to a year of real estate continuing to move higher. We had the same over here. I think a line goes here. You can see how it picked up speed. And then of course, okay, and then we got this other one here pointing to where we kind of are right now. We're not even at this cross. This is the weekly chart, so we're still several months away, a couple months away from this level crossing, at which point we should continue to see real estate do well. Real estate tends to do fairly well even when the stock market starts to get a little bit choppy. Low yields, low rates continue to drive prices higher. And real estate, most people are on a 3 or 5 year mortgage, so they're not up for renewal until after the market crashes. They've lost their jobs, they can't get a mortgage. There's usually a little bit of a delay there in real estate. Tough times after a stock market crash and tough economic times. So let's continue to go a little bit further here. Now, after these levels here, right during just when this other shorter term cycle starts to top out, that's when the market starts to lose its momentum. We have the same here and the same over here. If I go forward, you can see the other one's going to form here. More or less, the cycle is topping out, and that's when the market, both cycles are moving right down and looking for some capitulation bottom. Over here, we are looking forward. Let's go right over here. March 2022. We are 2 years away, or sorry, a year away from this potential next major market top in real estate. I think it could be a rough ride. I think we could still see this chop around. It can still have big corrections, but overall, real estate should continue to unwind to the upside and continue to inflate in prices for a while, and then start a deeper correction. And of course, when you get into these are kind of the euphoric stages where everyone's piling into real estate. They think it's the best play. We have it again over here, and it is happening already. Maybe it's even sped up more than it should be, but we are going into this parabolic euphoric stage where everyone's more or less fighting for lumber. Lumber prices, I don't know if you've looked at the lumber prices. I can pull that up real quick here. Take a look at the chart of lumber. If I can get this chart to pull it up. Take a look at the chart of lumber here. And let's take a look at the monthly chart. So lumber, for 10 years, it kept going up, nice steady waves, but now we've gone, euphoric stage straight up in the last, in the last month, where it just continues to skyrocket from whatever the value is. I don't actually follow lumber in terms of commodity to trade or anything, but it goes from 275 somewhere down in here all the way up to 1,300, going parabolic. People have figured out their dream homes or their new homes or their subdivisions they're planning to build, and now everybody's so committed they don't want to stop, and they're fighting over lumber, and lumber prices are just going through the roof. Everybody wants to get it done, and usually what goes straight up like this comes straight back down. So I think there's huge opportunity down the road. Home prices are definitely getting are out of whack, to me it feels like, but some pretty interesting stuff here. Now, if we take a look at the overall price action, I think there's some pretty good upside potential here in the real estate. Again, looking at all those different ETFs, you can definitely take advantage of those going forward and learn a little bit about how they work. Let's just look back at this table real quick, and you can actually go to taxes, find out how the short-term capital gains tax is, which I think, I don't know exactly what it is in the States, but if you hold it for less than 30 days, I think, then you get charged at, regular kind of tax rate. If you hold it for longer than that, then you get a lower rate on tax. So it's pretty interesting, the opportunities here in the real estate if you can get in. And the nice thing is anyone can get into the real estate market. You don't need to spend millions or hundreds of thousands to buy a property. You can just go and buy a few $1,000s, hold on to it, let it mature, and buy your basket of different real estate kind of markets and collect the dividends every month or every quarter when they're paid out, and eventually move out of it when the market starts to show signs of a top, and then you can step aside and pick up real estate when it's really cheap down the road. When we go back in time, you might be able to pick it up on a huge spike to the downside when it's undervalued again and nobody wants it. Anyways, hopefully that gives you some insight, kind of just off the cuff, kind of a quick update, some interesting analysis. But if you look at the markets, you can see how there's just cycles and cycles over and over again in this market, how they play out. And real estate is a pretty neat way to take advantage of real estate through the stock market. Anyways, that's it for now. Take care. Bye-bye.